have genuinely got a really good feeling about this video. You're going to absolutely love it as we do a deep dive into the Bitcoin chart, going over my current trades that I got open. As you can see, I have added and opened a new Pepe long and a new Bitcoin long. As discussed in my previous video, we were looking for another drop to the downside, longing while we got all the world war fears going on, and essentially just trading the charts. That's all we do here at Chart Champions. We plan the trade. I have traded the plan with this long trade from around $105,000, and now in this video we are going to be going over what are we looking at next. Well, we can see during London session today, for the first time in a long time, a bullish London session. I was totally looking forward to this one. A nice rise to the upside, actually coming off the back of this symmetrical triangle. So you had a bit of a symmetrical triangle, a very, very boring few days of price action overall, to be honest with you. But nevertheless, that boring price action did give us the long trade entry. So what more could we want? Symmetrical triangle in the end, breaking to the upside. But are we going to reach the overall triangle target above us? Or is the market too weak? Is this just the bull trap before another big dump to the downside? That is what I will be telling in this video. So pay attention to the whole way through. Listen carefully, because I assure you this, that the information that I will be giving in this video is going to be extremely beneficial to you. So with that said, let's go into the video, right? So first of all, let's do a quick recap from my last video where we were trading around here, $106,000, and I was explaining why we wanted to see another bit of a drop to the downside, where into the low of our CC Fibonacci, into the point of control, and we needed to wait for a lower term time frame entry trigger. What does that mean? Well, really simply, what it means is we were not just going to place a random long order, limit orders. We wanted to wait for a move to the downside and a lower term time frame entry trigger setup. In the end, I actually took two different long trades here, and the one I'm in right now is from a very special setup because it was actually based off of a CCV 2.0 setup that I took. This lesson was actually a brand new lesson released on the 18th, so 2 days ago now. Brand new lesson released, CCV 2.0, and on the very same day, it gave me the long trade that I am in today on Bitcoin from around $105,000. So I was very happy with that trade, to be honest with you. And it was based off of the CCV 2.0. And what we are looking at next is, well, we got a bit of a move to the upside. In the end, another higher low, lower high, higher low, breakout to the upside. So, as I was explaining, we are going to be looking at what are we looking at next then. So, one thing to bear in mind is, well, let's just hide everything. Take a little bit of a zoom out. I ask rhetorically because you cannot answer me to the person, but you can answer this in your own space and your own head right now. Does this to you look like a bullish or a bearish chart? When you look at this, just the price action that you see right here, do you think that we're about to hit new all-time highs? Or do you think we're about to drop below $100,000? That would be my question to you right now. And the answer, if you're really thinking about this, would be it's a little bit, from the information that we see on the screen, it's about a 50-50 gamble. We got a 50% probability of a rise and a 50% probability of a drop in this location. Why? Because we are just in a totally big sideways range. Okay, so when you actually just hide everything else a second, you can see we are right in the middle of a sideways range. With that sideways range, we are just tapping into the absolute middle of that range. So when we talk about probabilities, we have a high degree of probabilities from rejecting at range high. We have a good degree of probability at bouncing from range low. But when we're in the exact middle of the range, it doesn't offer the greatest probability in terms of what I would class a really good high probability long, which again comes at the lows, or a high probability short, which again comes at the highs. When you're in the middle of the range, first of all, is it tradable? Can you get a trade here? Yes, of course you absolutely can. But when you're talking about a swing trade trading the range, does it give a high probability? The answer would be no. You're looking at around the boundary from around 55 to 45%. It's not the greatest trades, but of course there are times where you can see here, you come into the middle of the range, you get a bounce. You come into the middle of the range, you get a a drop in this instance. So there are times where this can offer a trade setup, as you can see here, and as you can see here, retest all the way back down. So there are times where it can give some trades, don't get me wrong, and we will explain that during this video. But for the real simple factor of totally sideways range, totally in the middle of that sideways range, is it a good swing trade trading the range? No. So what we need to do is we need to look at other setups. Okay. First of all, actually, what we can do is zoom out. And straight away, once you zoom out, you understand that the probabilities are increasing of a bullish move to the upside simply because we are in a bull market. People might argue or disagree with me, but I still believe that we are in a very strong bull market. And, that my opinion on that is not changing at the moment. So when you zoom out, you would say the probability of all-time high is higher than a big drop to the downside simply because we are in a bull market. But this is the thing, if you are just simply zooming out, and this is really important to listen to here. Okay, so let's do this. I enjoyed a little bit of camera moves. Let me have my time. I will say this, that if you are zooming out, like I've just done, and I said zoom out on the chart, look for yourself. We are in a bull market. And if you simply take that at face value, you are always just zooming out and saying to yourself, we are in a bull market. We've clearly still got really good, strong, higher highs and higher lows. We've not seen any major signs of weakness. There are some medium-term time frame signs of weakness, but in terms of a large sign of weakness, we haven't got that yet. We haven't got even a typical distribution range playing out at the moment. We haven't seen an upthrust after distribution on a medium-term time frame. So when you zoom out, there are a lot of factors that, lead you to believe we're going to go higher. But listen carefully. Why is this dangerous? Why is this making it difficult for yourself in terms of a good short trade? Because if you only zoom out and you only say, well, the higher term time frame's bullish, I'm going to look for higher. Well, what happens if the market drops next? You are left thinking, wow, that isn't what I was expecting. I was expecting a pump to the upside. I wasn't positioning myself. I wasn't interested in any shorts because we're in a bull market. The highest probability is all-time high, which I agree with, but that does not mean I will close myself off from taking shorts. Even though I think all-time highs are coming, even though I am bullish, even though we are in a bull market, I will still take shorts. Why? Because if the unlikely probability that we get a big drop to the downside plays out, and I'm in no short trades at all, well, I'm in a very bad position. And on top of that, if you wait for the higher term time frame sign weakness, where it's clear we are no longer in a bull market and you're expecting a big drop, you are very late to the short. You're very late to the short. So if you want to get ahead of the game, ahead of the curve, yes, it increases your risk. Again, that's debatable. It's for a whole nother topic. I don't really think it's increasing a risk from taking a short trade in a bull market. But I digress because I will talk about that for hours. But nevertheless, where I'm going with this is you still have to open yourself up to short as the short I'm still on Bitcoin. So this is what I'm teaching. This is what I want you to get into your head and understand, that you want to be in these positions where you can be in a long from support and a short from resistance. And I know on Bitcoin, if we do get a big drop from here, I will get stopped out of my Bitcoin long and probably my altcoin longs, and I will let my short run for bigger profits. And if we get a massive pump to all-time high, I will get stopped out of my short and I will let my longs run for bigger profits. But because I have a short from the high and a long from the lows, I know that whatever happens next, a massive pump or a massive crash, I am guaranteed profits. Isn't that just a wonderful position to be in? And it's not like this is a mysterious, how can that happen? Listening along, understanding what I'm teaching you here with these videos, we were short from the all-time high value area high with the Donald Trump tweet assisting greatly. But on top of that, we got the long from the lows from a planned out trade. We needed to wait for the lower term time frame entry trigger, which Surprise, surprise, was the CCV 2.0. If you want to learn about the CCV 2.0, go over into the website right now, chartchampions.com. Brand new lesson, brand new theory, and it's going to change what you understand about that 80% rule. Uh, it became too popular. We released the 2.0, so the 80% rule is no more. And we also have launched a brand new swing trade type of investing and diversifying stream. So this is a new stream that we've got coming. Well, it's already started. It started yesterday. And so it's for if you're looking for those long-term stocks, whether you missed Planter, whether you missed Nvidia, whether you want to get into those long-term investments, talking about what potentially 1, 2, 4, 10 years into the future. If you struggle knowing how to find such long-term investments, or you want to just some tips and tricks, then this is what we're doing now with our brand new stream for the champions. So yeah, you can take full advantage right now with the new CCV 2.0 and the brand new investment stream that we got going on here. Better time than ever than to be a champion member. So I'll leave it at that. And if you want to see more, you know where to get it, chartchampions.com. With that said, let's come back over to the charts and take a view here of what are we looking at next then. So, I've made it very clear how I've got into my short, which was after the rejection and the retrace. Actually, it was as we were breaking down, I took the aggressive option, and then I've got the long from the lows down here. So, amazing. I think you say in a sarcastic voice, amazing, Daniel. How does that help me? Well, what we're going to be looking at is what we're looking at next then, right? So we've clearly seen a nice move to the downside. We've clearly seen a very nice triangle formed after that move to the downside. This could have caught some people out, because a lot of people will see a symmetrical triangle and they'll think, oh, look at that symmetrical triangle after a move to the downside. Oh, this has to drop down, right? Because everybody thinks move down, triangle has to move down. Guess what? That isn't the case. We got a move down triangle reversal. Okay, that's absolutely fine. But what are we coming into now? Well, first of all, you can understand the default triangle target, which is going to be the length of this triangle. And before I get people commenting, oh my God, Daniel's looking at a triangle pattern. How newbie? Well, guess what? You can look at triangle patterns and have an understanding of the market in a greater sense. We're not just looking at this. But, from the standard target here, we can see that's going to be coming in at around $107,000. Actually, really nice target there, $107,000. So, yeah. This is the standard triangle target. You take the length of the triangle, you expand it to the breakout. We got a target sat there around $107,000. So be aware of that, okay? It doesn't hurt anybody being aware of it. Then on top of this, we got a really nice naked point of control. As you can see here, 106,800. One thing that I'm slightly aware of, well, actually, I want to make you aware of a really big level that we've already hit into, by the way, which is something that I want to expand upon, because this is the where a lot of people go wrong. They miss these levels. So if we just take the anchored VWAP here, if you wonder, oh my God, why are we rejecting from where we're rejecting from? There's nothing there. There is. Look at this massive downtrend anchored VWAP. Actually caught the high really, really, really perfectly. So if you're the scalp traders out there, there's understanding that there's never a random pivot. If you wonder, oh, why did we bounce from here? Why did we reject from this exact pivot? Why did we reject from this exact pivot, right? There's always an explanation, of course. Here, for example, you had a lower term time frame range swing failure pattern. Here, for example, you're hitting into the anchored VWAP. What you also have to understand, big brain moment, is that this is the pivot that's rejecting us right now, but that doesn't mean we cannot come up again and form another pivot. It doesn't mean that this is the high, it's down from here. No, we could form another pivot high, right? For example, a triangle target, and make our way down. Like, these are pivots within the chart. Every pivot has a technical reason behind it. So that's what I just wanted to say. Well, actually, if you are wondering why are we rejecting 106,500? Oh, downtrend anchored VWAP, my friends, a lovely level that a lot of people forget about. And so why am I mentioning this? It's a level that a lot of people forget about because of the level above us, actually. This 107, 106, 800, I've seen it mentioned a lot. And so when we see this kind of what I class as like a crowded level, like this level that everybody wants to short, $106,800, it kind of worries me. And we generally see two things play out, okay? So option number one is the level's front run. If everybody wants to short this level, then what happens? The level doesn't get hit and everybody misses that short trade. Or option number two, Everybody wants to short this level. You hit the level and you just go straight through it. Everybody takes their shorts and then they all get stopped out very shortly afterwards. So when a level is super crowded, I, I I like to avoid trading it because I understand that one of those two things will happen. Either we don't hit the level when we front run it, or it just gets a short squeeze through the level. Of course, the third option that you have to be aware of is that you get a perfect reaction from the level and it does reject and everybody wins. We have seen that on Bitcoin where we get a lovely scenario, everybody wins, but it's not the most likely. It's just not the most likely in my opinion. And that's what you're here for, I suppose, my opinions. And so that would be my opinion on that level. Not such a fan of it. I do think it's a crowded level, very obvious level, but yeah, I mean, you can see what I've got here, right? The alert set, ready and waiting. I'll see the reaction. I'll see the order flow. That will be the most important thing at that level. But I am slightly hesitant on it, to be honest with you. The other standard bit of analysis we can do here, right? Just pull a fixed range of this range. You can see that value area high coming in very close to my entry, 107,800. So that's moved up ever so slightly, right? So, um, yeah, why am I mentioning this? Well, what we will do is this is the higher term time frame range, and then we got a more local, lower term time frame range going on here, right? And you can also see you're at that value area high. What this does show us is that clearly we got some support building up around $105,000. So this is what you'd class as intraday support. I was going to talk about my Elliott wave count as well because I do have an Elliott, but I do not want to do that in this video. If you want to see my Elliott waves, smash those comments down below. But for me and on this video that I wanted to release here, it was more of letting you know the triangle that we've broken out of, the official target, the reason it's crowded, the current pivot that we're at, and primarily, I want to help you. I want to educate you, and you need to understand how a lot of people will do one of two things. They will see the profits, they will see my win rate, and they will just say, "Meow, meow, meow." I don't know, they'll just spurt a load of rubbish. The other person will see this and say, how, please teach. Okay, for the people that want to learn, the people that, want to improve, I'm teaching you that the real key to success here is not, I know 101 different things, I suppose. The key to success is not, I'm trying to think of something intellectual here for you. The key to success is not taking a load of trades. I don't know. But the key to success is, that's what I do know. The key to success, I do know. The key of not having success, I suppose, is the opposite of this. You enjoy it. The key to success is really simply positioning yourself in a very clever way. Well, it's not that clever. It doesn't require high IQ to do this. What it does require is patience and good understanding of the market. You want to position yourself into longs when you reach support. You want to position yourself into shorts when you go to resistance. And on top of that, the most important thing that I'm going to leave you with here is when price rises, and I can say, well, at this point, the highest probability is going to all-time highs. I believe, I will come in here and I'll say, I believe we're going to all-time highs next. Because from a probability standpoint, that's the highest probability. But what you truly need to understand is at this point, if we are rising up and I'm thinking we're going to all-time highs next, let me ask you, what trade am I looking for? If we get this vertical rise to the upside, okay, please listen carefully. We get this vertical rise to the upside. Maybe we take out this pivot here. We are trading $109,500. I say, I think we're going to all-time highs next. That's the highest probability trade. Maybe as well, I'm not in any short trades at this point. I'm in all my longs from lower. I'm in no short trades at this point, and I say the highest probability is all-time high. What trade am I taking here? Am I taking a long because I think we're going to all-time highs? No, and no again. I'm never going to be taking a long there. Even though I think we're going all-time highs next, why am I not taking a long here? Because my longs are open down here at support. Why would I open a long up here after a massive move to the upside? I'm just not going to do it. That's not how I trade. It's not how I teach. It's not how I preach. It's not how I live my life. No, I take longs at support. Okay, so even though I think we're going to all-time highs at this point, hypothetically speaking, I would not take a long. The only trade I would look for, the one and only trade I would look for up here is a short. And I know that's going to blow the minds of some people. They'll be like, why would you look for a short trade, Daniel? Price is rising. You're saying price is going to all-time highs. Well, because I only look for shorts on rises, just as I only look for the longs on drops. I did not long up here. I shorted up there. I would not long up here. I would look for a short. We get one of two options, right? Again, I could be in no shorts at this point in time. But then let's say we get the fake out at a high, we get a bit of a short trade setup. At that point, I would take my short. I would have my invalidation. I could look to trade it all the way back down. It's just this understanding of how do you get into, the key to success, having longs from support and shorts from resistance like I'm in right now. I'm guaranteed profit. That is the key to success. How do you do this? It's not magic. It's, again, taking the longs confidently when you drop, taking the shorts confidently when you rise. And, this is something that I want to improve and get better at, because I can understand that sometimes my content can be confusing in terms of, if you just randomly see a post from me saying, "Oh, I'm bullet," or you just read the title of my videos, this was kind of a good title, I suppose. But, I could have titled this video, "Oh my God, massive crash coming," or whatever. I could have done whatever title I want. Some people will just read the title, just as some people will just read a tweet totally out of context and take a trade off of it. And I just facepalm. I say, why? Why do people read the title and trade? Why do people read one tweet and trade when I've spent hundreds and hundreds of hours educating and teaching you? I don't do this for any reason other than this is the key to success. This is how you can improve. I want you to be at my level of trading. You're not gonna get at this level of trading if you think, "Oh, I'm gonna read the title, or I'm just gonna trade off of a tweet that Daniel posts." No, don't do that, please. Of course, there's no financial advice in my videos. That you have to understand is the most important thing. Never do financial advice. I'm here to educate you. I'm here to teach you. Don't trade off of a tweet, please. I beg you. Watch the videos, educate yourself, and you are going to be having that key to success. You're going to know how the market moves, why the market moves, when the market moves. You think it was random that the market moved today, right on the start of London session? No, this is not random. There are Fibonacci time pivots. There are market session pivots. So yeah, where I'm going with this, you can learn how, why, when the market moves. Educate yourself, learn, I beg you. Then you can start to get these win rates. This is when you can start to get these profits. And before someone says, "I don't know, Daniel, you're trading such small position sizes," deal with it, man. Deal with it. This is my trades that I'm taking on this account. Of course, this is not my main account, but I'm not going to be showing you multi-million-dollar trades. I don't need to. I don't want to. It's as simple as that. You can see this account. These are the trades I'm in. If you want to get to this level, I will help you. I will happily help you. If you want to learn, I will help you. Show me the effort, and I will be there every step of the way, answering every question that you can have about trading. We are here. We are helping. I will end with that. Chartchampions.com. New CCV lesson out. New investing and diversifying. We've got live trading as well today. We've just got everything that you need on the trading sphere. And of course, updates throughout the day in the Discord. I just hope you've enjoyed. Thank you ever so much. That's me signing out. Cheers, everybody. Thank you and good.